Hello everyone, Maurice Singh here. Welcome to Tanks Invest, where we're going to be talking about investing, finance, and professional development. For today's video, for entertainment purposes only, the stock we will talk about today would be NIO, ticker NIO. As you know, across the board for the EV stocks in the last couple quarters so far, or like the 5 months that we have had so far, we've experienced quite a significant sell-off across the board, right? With respect to just NIO, it was up all the way to the $67 mark, or 66.99 to be more exact level, and we sold off significantly in Q1 Q2 so far, down to around like currently floating around like the $34-$35 level. So I'm going to go through a technical analysis where I see the stock going from here. What are some level of resistance that we should be looking out for going forward? Are we looking for more of a crash coming up, or is it more like a reversal that's coming in play right now? So I'm going to look at the psychology behind how investors are thinking right now on this technical analysis. Also going to give you guys the resistance level to watch out for in case you think about buying into the stock to further dollar cost average, and my long-term price prediction for 2021 as well. So stay tuned, stick around, and let's make some money. Alright, so take a look at the technical analysis for NIO, ticker NIO. You could see that on the annual perspective right now, we roll up all the way from the bottom, trading earlier in last year in September around like the $16 level, which is actually the price point I actually bought in. Subsequently rolled that all the way up, and I actually sold around like the $50 level, made some pretty good gains there. And this was majorly driven by a lot of the euphoric pump that we had, with respect to the inauguration for Biden administration, with the green energy plan that he has, and also with respect to just like people were hyping up the macroeconomical shift, the evolution of EV vehicles being dominating into the world going forward, and NIO, Tesla, on the forefront of those, and people were basically buying up because they think it's the next big thing, which is true. It is going to be happening in the next, not in the near like 1 to 2 years, but in a decade or like the next 5 years or so. But because people were prematurely hyped, it subsequently pumped this up. And because of the fact that Tesla also went through that stock split, and also with the S&P 500, that also gave a lot of investors confidence across the board for the EV sector as a whole, which subsequently drove the stock all the way up, alongside with XPeng, Li Auto, Lucid Motor, even CCIV, which you probably saw the video that I posted earlier today as well, to $67 level at the high peak point, that all-time high, right? And ever since then, because of the fact that we came up so quickly in Q1 and Q2 so far, it just takes a little bit of a needle to pop the balloon, and that's exactly what happened, right? Whatever goes up really fast blows up really fast at the same time. And some of the negative exogenous factors that we've had so far on the macro perspective, is the inflation scares that we've been getting, is the monetary policies that we've been getting scared from Jerome Powell himself, with respect to the tax adjustments that we've been getting from Biden on the corporate level and also on the capital gains level, the Chinese tension that we're getting, among US and China on the trade tension, also on top of the EV chip shortage that we're getting so far, right? And on top of all of that, I've named like 6-7 so far, is the sector rotation, right? Going from growth stocks to and EV stocks, which is a growth stock obviously, to more like the resilient recovery stocks like the AMC. I'm talking about like Royal Caribbean, like JCPenney even, or Macy's, Foot Locker, those type of consumer retail, recovery back to normal economy type of stocks, right? And this is really just a lot of exogenous factors that's been negative so far, putting the pressure push downward to NIO, which subsequently drove the stock all the way down to the bottom right here at the $34 level, right? Or at one point in the March 5th crash, which I'm putting exactly right here, we hit all the way down to like a $31.09 level, right? And ever since then, we've been consolidating, and each spike, and if you time the spike correctly, you could see that the spikes are really, happening somewhere around like the mid of every single month, which, as you can see, that's exactly really it, right? And these spikes are formed by the CPI report that we've been getting on a mid-month perspective so far, and also with respect to the Federal Reserve speech that we get from Jerome Powell on the updates around the economy outlooks, with respect to inflations, with respect to the tax rate adjustments, with respect to the trade tension. And it's just been driving this like a roller coaster ride on more of a psychological, mental bipolarism, if you may, just up and down, up and up, up and down, right? So people have been just kind of dragged left and right, don't know if it's going up or going down, right? And based on the investment sentiment right now, I think the base right now is forming very consolidately at the $34 level, which we're currently floating at right now. And we have tested this once, twice, 3 times, 4 times, 5 times, 6 times so far. So NIO is definitely forming again like a Great Wall of China right now. It's gonna take a lot of soldiers, a lot of negative affectations for us to push this stock down even more. And you can see that right now we're kind of struggling, right? We are struggling, but despite we're struggling, the volume is relatively low. And you can see that on a near-term perspective, on a daily, we are crossing upward. So I do see some sort of like an upward trend in the near term. Probably break through this a little bit, but it's gonna take some really positive affectation for us to break through this right now. It seems like it's just kind of dead in the water right now at the moment for NIO. So I think right now could be an interesting price point for us to get into, knowing the fact that we tested like 7 times now. We're about to test this for the eighth times now. So $34 level is definitely a fair price for us to get into, knowing the fact that we've sold off so significantly right now, right? By almost half of the stock was basically gone, right? $35 is basically wiped out just like that. That right now is a good point for us to get into. Yesterday was a down day, so that's why today's a green day, which makes sense, because it needs to be, kind of go through a cycle until there's a positive catalyst with respect to maybe an earnings call, maybe is an indicator that the economy is coming back up with respect to the productions, also on the chip shortage side that will subsequently propel. So right now when it's kind of have this inactivity is a good time for you to further down calls average to build up your position slowly. These are the times that the guy from above is basically giving you an opportunity to build up before the basically calm before the storm type of mentality, right? So right now, looking at the near term, I do see some sort of like an upward trend. However, looking at the crossing here, you could see that the scoop is relatively narrow and relatively small. So it's going to be more sideways treatment going forward. Look at the RSI. It is oversold and is basically peaking upward right now. So that means we're going to see some more upward trend in the near term. But in terms of like how high, based on the peaks we have seen and historically, I don't think it's going to be that dramatically high like we saw from back in the days in the last couple of months. So it's going to be trading more sideways. I do foresee us to be testing this level consistently, and contingent on no more exogenous factors that's negative, contingent on no more crazy news that we get from the Chinese tension, and contingent on Biden's and Jerome Powell stop talking crazy on the news that's scaring people away, that we should be forming this level for until we get notification on the economy coming back up. But if we hear more negative news, and if we hear something more fundamentally shifted about like NIO as a business as a whole, the next resistance level is going to be somewhere around like the right here, the $30.30 level, which if we get to this level, that's a really strong base. However, the base was relatively shortened, right? Because we only formed that once here. And there was like pretty much no gap in between besides like once here. So we do have technically 3 bottoms that form technically, and I actually foresee that to be happening. We will be bouncing that off in the near term, just based on how the chart is set up and just based on how the cycle of the stock is supposed to be shifting out going forward, because I don't foresee us to be hearing any positive news near future. Because it takes time for like these massive macro trend to be corrected, right? And it's taking time right now, so we just need to be patient and let the course correct itself slowly. But in the near term, we see some bounce up, and then we're gonna see some of a downward, because this is a pretty much of a resistance level that we've had. That it will go back down, and then I think by that time, around like the $30 level again, right, I would start buying up a little bit more, keep building up my position. And we don't, if we break that and the resistance level is not it's not strongly formed. Excuse me, sorry, tongue twister. That we will potentially get down all the way here at the $28 level. So that's possible because we did have this like sideways consolidation for quite some time, for like how many days? Yeah, almost like half a month. So that's a pretty good consolidated form. But I think the likelihood of getting down all the way here will be like 10%. I think for us to get down to like the $30 level again would be somewhere around like a 50-50%. I think the likelihood of us like further consolidate sideways level will be 85%, with 50% of more of a black swan event that happens. So, and on top of that, the risk reward ratio is pretty good. I think we have so much off already. The downward is not going to be that steep, right? It's talk about like maybe $5 of a difference of correction downwards, but with a northward of $35, of an upside potentially in the near future, right? So $5 of loss with $35 gain. So just think about that ratio. That's a pretty steep one. That's 7-1 in terms of the risk reward ratio, right? So if I was you right now, again, I'm not a financial advisor, but I think it's a really good time to buy now and further dollar cost average. Don't throw all your bank account into the stock, but buy maybe 25% and then keep chipping away if it goes down even more. Right, so just to recap on the quantitative analysis based on the research and insights I've gathered so far, I think $34 level that we are currently trading at right now, or $34.50, I think that's a fair price for us to get into, knowing the fact that's like a pretty strong consolidated platform that we have formed so far, or aka the Great Wall of China that we have formed so far. That 34 is not a bad price for us to get into, knowing the fact that, again, right, we tested that level 7 times so far. And if we break that, which I think that's likely because of the fact that it's kind of weak with respect to the volume that we have had so far, and I think we're going to be waiting a little bit longer until the economy and the whole EV sector is going to recover soon. That 3150 would be another level that we'll get down to, contingent on the next CPI report that we'll be getting. That is not going to be negative, depending on the consensus among investors, and contingent on no more macroeconomical negative affectation that will be hindering us, with respect to the inflations, the tax rates, the foreign trade exchange that we have with China. That 3150, that's a likelihood of us getting that like 50-50. And if we even have a more of a further crash, 2950, I think that's just a steal straight up. I would really love to get to this level because that just by that point the outlier will be so steep that the risk reward ratio will be 1-10, and I think by then I would just load up enormously. And with respect to a year-end price target, $85, I still stand by this number. I think we will get there. It just we're just waiting on the patience game right now, and like Warren Buffett said, right, patience always pay off, right? If you be patient and you're being frugal and you curl dollar cost average on a consistent perspective, you will never lose money in the market, and I can promise you that. And with respect to $85, if you're buying now, that's 150% gains, 2.5 times your money, which is very good gains in my opinion. Alright, so that's it for today with respect to my NIO technical analysis and some of the insights and research I've done so far. Really appreciate you guys for dropping by again. Please hit the like button, the subscribe button, also that bell notification. Really appreciate it. Please stay tuned for the next video. Thank you so much. Take care. Bye.